Good evening. Hope you are doing very well. I will get going in a few seconds. Just while we wait, just a bit of an introduction. In case you don't know, my name is Peter Bullivant. I started my trading journey at the beginning of this year, really in earnest. And I found an amazing group that I belong to that are really supportive and help all of us continually learn about trading and developing our approach to trading, our strategies, and also our mental approach to trading, which is one of the most important elements. What I want to do this evening is just give you a little bit of an insight of what I've learned. I'm not necessarily saying I'm an expert in this, as I'm still very much learning. I've developed my skills, hopefully, but I've still got plenty to learn. So yeah, I just wanted to show you a bit about what I've learned and maybe enter a trade this evening. So what I want to do is share my screen with you, and we can get started. So first of all, what I want to do is show you where we do our analysis. This is a website called TradingView, which you can sign up to for free. And this helps us, is the place where we do a lot of our analysis. We do lots of analysis using different mechanisms and methods and strategies that help us predict where price of a currency is going to go up or down. And we do this by using something called price action, because price reacts to itself, because behind the scenes, obviously price is being dictated by particularly the large banks and other institutions putting on large orders. When they put on large orders, they generally have a point where they're going to enter, a point after that where they're going to stop the trade, called a stop loss, and set of points where they're going to take profit. And because of those, price goes up and down in a certain way, in certain patterns, and it repeats itself. And it has certain lines, certain prices where it won't go through or it won't go past. And these are called lines of support and resistance. I mean, you use those to help us understand where price might change direction. What we do is we use that show us price in a given time. I'm just going to tell you. So in order to understand, and what I like to do, I'm going to focus on one currency just this evening, which is the euro versus the Japanese yen. And so it's the price of the euro versus the Japanese yen, and that fluctuates all the time. And what we want to do is understand when it fluctuates and how it's going to get to a point where we think it's going to change direction. At that point, we believe the momentum's there. We can then enter a trade to say that that is going to be above or below where we want to be. I'll show you that in 2 seconds. What I like to do first of all is just to understand where the price has been and where it's been. First of all, I tend to look at the days. So this is quite a long-term perspective. And what we can see is during the last days, we've been in an uptrend. So it's gradually going up. You can see these, the way it goes up, it always goes up, comes back down, goes up, comes back down. It's the same coming up. It always retraces itself. And that's because if you have a seller, you need a buyer. So you always need to be marrying these pairs up. So what we can see, and we can start marking up, is quite a big strong line of resistance there. So it's come up to that price, come back down, thought about it, come back up. It's at that price at the minute. So that may well come back down. So that really helps us. Also, it's come back down to a point here. If we go back and look left, we can see actually it's on a high for quite a long period. We do have a lot more sort of points of resistance back here, which fit that one there. So if you can see there, back as far back as November, it's also come up to that same point, and again there. So that's a pretty strong line. So that may help us. When we go down to the slightly lower, think that might hit this and then come back down again, but that would be going against the trend. So we'll have to look at that when we get down there further. It's also come back down here and not past that, so we'll also mark that point. So that gives us a channel. So if we go to the 1 hour, so I also like to put these on. So we can see what it's been doing. Each one of these candles show what happens in the price in 1 hour. So for example here, it started at this point, it's green, so it's gone up. At one point it went up a little bit further and it's closed after that 3 minutes there. Then opened here for the next one and shot back down. At some point it came back down here. And then in that 3 minutes close. So this is how we begin to have a look and see where it is. Again, we've got some lines of resistance here. So it's come down here 1, 2, 3 times. Again, we have a look back to see whether that line, again, we can see that's quite a strong line, which we can then draw on. About there, where let's move that down. There. So it's touched that line and come back down. Here it's come close to that line and come back down. Here, then went up close to that line, not sure, and then we broke through it. And come down. So again, we can see that's helping us where these lines of resistance are. We'll go down to the 15-minute. We can see whether we can get any further lines. So again, we can sort of see there's something here and there. Again, it's touched here, it's come close, gone through. So we're now waiting to see. So that's where it's given us our initial sort of lines of resistance. One other tool that I use in my analysis is called the Bollinger Bands, which then draws on these lines here. These are all different moving averages. So it gives you the average of a value over the last period of candles. This is a moving average of the values over the last 20 candles. Up here shows this the high and the low, and these act as elastic bands. So it pushes up against them, comes back down, as you can see here. Pushes up against it, comes back down. Pushes through, comes back down. So again, it repeats these patterns. So we can see here, it's really hitting this point, but we're on an uptrend, so we wouldn't necessarily get into that. We want to go with the trend. What we might want to do to see where it comes back down, or wait for it to push up. If it does push through this, it's likely to push up to here, come back down, test this line again, and then go back up. So it's likely from here to here, if it breaks through, it's going to go up, come back down to this line, and then head on up that way. And this point here would be a really good point to enter trade, because we'll be with the trend. We've got some nice resistance, and there's just an idea really in terms of the basics. What we've been looking for EuroGPY is to see what happens next. A lot of the trading is about waiting and being patient, and that's one of the hardest things. and lots of trades where I don't succeed, and I got into that trade too early, which means I haven't waited for the event to happen, and it's actually continued in a direction, or the move has happened much later. So we have a look on the 5 minute, and this is the one I look at in the main. You can see the line that I drew is there. We're looking for it to head up and then come back down. It may head up somewhere around here. So it's broken through that. We've got that line of resistance here. So when it hits this line, it's going to do one of two things. It either may well come back down and then push on to come back down and head on up. So that's kind of where the basic analysis is. Okay. So one of the bits I have mentioned a couple of times is something called the Fibonacci. The Fibonacci sequence is an amazing, almost magical sequence of numbers, which is basically 1 plus 1 is 2, 1 plus 2 is 3, 2 plus 3. So you're just simply adding the next two numbers together. 3 plus 5 is 8. Sounds very, very simple. This is an incredible sequence that is at the heart of many amazing things in nature. When you look at this and create the ratios that this creates, many of your beautiful shells that you see are created like that. The Fibonacci sequence, including things even like the pyramids and some of the Greek architecture. You've got something called the golden ratio, which is within this, that's used for the construction of the pyramids and some of the sort of famous classical buildings. So it's an incredible mystery, if you like, of nature. But we use it in trading. So where we have, for example, this is showing quite a strong push within here, which is called the fib retracement. And what this shows us is we can use it. And what we have there push up a bit. It draws the when it pushes up like that, as I said, it's going to come back, retrace somewhere back down here. When you've got a good strong push up, it tends to retrace into 2 or 3 areas. You will push past the halfway point area there. What this helps us to do is predict that actually this price, when it does start to come back down, may well come back down to this level. And if we then also got some areas of resistance that marry that up, that gives us a real indicator that price may well come back down to somewhere down here. So if it does hit that, and we have other confirmations, then that's a really good strong indicator that's going to come here, hit this line somewhere around here, and move on up. So that's how Fibonacci can help us in our trading. What we also use within, and this is part of the academy that I belong to and our group, which is a fabulous resource. One of the things they've got is some different strategies that you can use. We'll keep an eye on that. And this one here, again, you can see this is very similar. This is a strategy called CASHTRAP. And this therefore has many of those things, so you've got exactly the same kind of setup here. So still on the 5 minutes Euro JPY. What it also gives us is an arrow, and this arrow helps us to do as an added confirmation as to whether we should get in. And what we're looking for because we've been on an uptrend, and we know that because it's generally obviously going up, but also it's above this dark red line, and that's another moving average. If it's above that, it means it's in an uptrend. So therefore, we're going to wait until this tells us that we need to do what's called a call or a buy or a going up. And what we want to do is just draw some red lines. It helps you here. So we have a red line on here, which again is equivalent to that. If we look at our other analysis, what we've got here is price just here came up, stopped at that point, the next candle came back down. If we mark that up, and that, if you can see, is spot on to where our 50 level for the Fibonacci. So in terms of a good trade, you may well be looking for this to come back down to this line, and once it's there and we get added confirmations, we'll then head on up. And now we wait. We know that this is likely to go down, but we don't enter that trade because we're not sure whether it will, because it's going against the trend, going against the tide. And that's not what we want, because if we can demonstrate that going with the trend is likely to give us a better percentage, a better probability of a successful trade. In terms of actually making the trade, this is a broker. This is the broker I use. So this is showing the price every second. So as you can see, as we said, it's going up, beginning to level. We want it to come down, to then go up. And you can see this line showing the price every minute. Over here we have the button for a call. So that's when we click that button, is going to tell us that we believe price after a period of time is going to be above the point where we click the button. Put is exactly the same, but below. This is the amount of the trade that we want to enter, and this is the demonstration of the profit that we will gain if we are correct. And up here is the time that we enter the trade. For this strategy, I use looking at the 5 minutes, but then entering a trade for 3 minutes. And then you can see, and here we have the range of currency. So that's the actual broker. If we go back, we can see it's kind of on that line we drew. Remember, that was one of the lines that we drew originally. So this was the very high high. So if we go back to sort of 1 hour, we can see that was one of the lines that was way back. So it has broken through what we said in terms of that line and heading on up. So we're expecting it to probably come back down over here. So that helps us there, that confirmation. Just take that line. It looks like it's not breaking through this point of resistance, and it's going to come back down, but it's not sure. So what we've got here is a bit of an indecision candle. So it started at one point, it's gone up, it's gone back down, and it's now somewhere in the middle. So it's sort of deciding where to go. And this is how we can tell. Now we've got the next candle's come on. So this will be another 5-minute candle. So you can see the time over here. Now that's, again, you can see it's testing this line that we're doing. It's testing that line to see whether it's going to push up or whether it's going to come back down. If it comes back down, we want to look at it in terms of hitting probably this line here. That is our Fibonacci sequence of 0.5. If it breaks through, we're going to wait until it pushes up, comes back down, test this line again, and is then likely to go back up. We have a look at our hourglass there. So our line here is telling us that it's definitely wanting to go down. So some people may well get in on that. What we've also got within this strategy here is what's called the currency strength meter. So the euro is at 56 and the JPY is at 17. The euro is stronger, so therefore it's again, that's giving us another indication that we should go in for a buy as opposed to a sell, or a call as opposed to a put. So yeah, again, that's telling us it's going down. Again, that's against the tide. This just confirms that we're in an uptrend and we only want to do calls. Now these are other indicators that we use. These are relative strength indicators, and this helps us to understand. So this again is confirming that this price is going to go down. It's come up over this red line, thinking about it, and it's now coming back down. As it crosses, then that's a good confirmation that price is going to go that way. So yes, we could enter that trade, but because we're going in against a tide, it may not quite get that momentum and come back through. So we wait until we look. Check to see if there are any questions. And so again, please put any comments or questions you have on the Facebook Live, and I'm sort of looking at that. There. So this is what it's all about. As a Les, who is who we follow and is an amazing trader and amazing teacher. His key ones is we're paid to wait, because there's no point in getting into a trade that isn't a good setup. In terms of how we progress and make the money, we want to make sure that we don't over leverage our accounts and risk too much. So every trade we only risk a small amount of our overall account, often between 1% and 3% of whatever your account is. The aim of us and the strategy that we use is to build that account fairly slowly over time, but because of the ability of compounding that means that actually once you get successful and you get consistent, you can grow that account quite successfully through building that account. We aim to get a percentage growth each day, which often between sort of 2% and 5% or 6%, depending on how much time or how much you want to commit to this. If that if you hit that on a day-to-day basis, the compounding of that can increase your account. So you can go from $250, euros, pounds. Within several months, you can then build up to several thousand by consistently growing it and compounding it. If you want to look at my Facebook page, I've got a spreadsheet that you can use that helps you both analyze your trades, but also to map and plot and project your account growth. So you can track that over time, and you can show that you're growing your account over time, building it up because of consistency. And consistency is the key to trading. It's not about the big trades, particularly this, which we do because it's binary. So we're not in it for periods of time to get one trade earning us a lot. It's about being consistent and continually looking at those trades and building them up over time. and that's how you then build up to a €5,000 account, for example. And then if you put in your 2% of 5,000 on, then obviously you can do the maths in terms of that. If you're again growing your account by 4% a day, or 4% of 5,000, you're actually therefore beginning to generate a reasonable income or some very good growth in that account. And that's the underlying principle of this, that we get that consistency and we get that growth. So we appear to have got a bit stuck at the minute. We are approaching the half hour, so it's 26 minutes past. There's another reason for me to mention that, because there tends to be price reversals or changes in direction at the quarter and the half past and even the hour. So that's another thing we take into consideration, but it's likely that this may drop at the half hour. But it's as we can see, we drew this line on, it keeps hitting up against this line, hitting up against this line, trying to almost decide what it wants to do. At this point in time, we won't get in for a trade, because price action is all about understanding if a price does this, then the probability is it will do this. But at the minute, it's not doing anything. So we need to wait and see. It's either going to go this way and hit this and probably continue up, or break through this, go up, come back down and hit that. Okay. So we've hit a point in time where we've had about 15, nearly 20 minutes where it's not moved. And I don't think there's going to be a big movement. What we'll wait is for a couple of minutes just to see, one more minute to see what happens at the half hour. Hopefully that's given you an introduction of how we can trade and how we can predict. Obviously, just at this exact time of tonight, we haven't. Normally, I would also have one or two other pairs I would be looking at. I tend to stick to 2 or 3. But just for the purposes of this online, I wanted to stick to one. That means we haven't had a trade to enter, but hopefully that's been useful. And if you also want to understand more about the psychology of trading and the importance of the psychology and your mindset, then if you message me on my Facebook, then I will send you my guide to the top tips of the psychology behind successful trading, which will give you an insight to some of the key aspects, why the trading psychology is important, why your mindset is so important. Trading and successful trading is 90% head and 10% indicators and price action. It's about understanding when to click the button and when not, and what's going on in your head to help you understand why we often might not press the button at the right time. So message me for that top tips guide, which is completely free. Otherwise, please tune in again. Hopefully we'll get a bit more action, and I'll do a bit less in terms of the introduction, and we can go through 1 or 2 more pairs. But for the minute, hopefully you're all well. If you're interested in the trading or finding out more, see my channel, my Facebook page. or just message me and I can tell you more. Thank you very much. Hope you're doing well. Good night.